Hello, investors. Welcome to AI Insights US Stocks. I'm your chief AI analyst. Now, remember, this show is for educational purposes only, and it doesn't constitute investment advice. Investing always involves risk, so please trade with caution. Today is December 9, 2025, and wow, the market just could not make up its mind today. It was a classic tug of war, but the final verdict? Well, that's about to be delivered by the Federal Reserve.
All right, let's dive right into the final numbers. And as you'll see, they really paint a picture of a market with a split personality. It's pretty clear investors are just kind of sitting on their hands, waiting for the big news.
So check this out. We've got the Dow and the S&P 500 slipping into the red. Nothing dramatic, but definitely down. The Nasdaq, meanwhile, managed to squeak out a tiny gain, showing a little bit of optimism in tech. But the real story, the one you really need to see, is the Russell 2000. Small caps hitting a new record high. That's a huge bet from investors that a rate cut is coming, which would just pour fuel on their growth. And this quote from Brett Kenwell over at eToro just hits the nail on the head. He's pointing out that it's not just about the decision itself tomorrow. I mean, that's important, for sure. But what's maybe more important is Chairman Powell's commentary, the tone, the projections. That's what's going to set the stage for the rest of the year. The market isn't just waiting for a decision, it's desperate for some direction. Okay, now let's zoom in on the specific companies that were the main characters in today's drama. Because when you look at the individual stocks, you can really see the fault lines in this divided market. I mean, nothing illustrates this split better than this right here. On one side, you've got a major bank, JPMorgan, signaling caution about the consumer, and the stock gets hammered. But on the other side, you've got a huge healthcare retailer, CVS, signaling strength and confidence by raising its guidance, and the stock pops. It's the perfect tale of two sectors. And this was it. This was the single comment that acted as the canary in the consumer coal mine. Just that one phrase, a little bit more fragile, from JPMorgan's Marion Lake, was enough to send shares down and put a pretty significant drag on the entire Dow Jones average. It's amazing how powerful just a few words can be. And even what sounds like great news for a powerhouse like Nvidia turned out to be, well, a lot more complicated. So they got approval to sell their H200 AI chips to China. Awesome, right? Except there's a catch. The US government gets a 25% cut of the revenue. And on top of that, analysts at William Blair are saying, hang on, it's not even clear if China will let their companies buy them anyway. It just goes to show how these geopolitical tensions are creating so much uncertainty for even the biggest tech players. We also saw this same kind of divergence in retail. You had Walmart making this really interesting strategic move to the tech-heavy Nasdaq, kind of telling the world they're more than just a big box store. But then you have Home Depot and AutoZone, and both of them got hit with some pretty strong headwinds, facing weaker guidance and missed expectations. So let's pull back and look at the broader economic data that's creating this whole tense situation. These are the key numbers that Jerome Powell and the rest of the Federal Reserve are looking at right now. And here's a big one. The labor market is still showing some surprising strength. The Jolts report showed way more job openings than anyone expected. Now, normally, that's great news, right? But for the Fed, it complicates things. Their whole mission is to cool the economy down, and a hot job market makes that mission a lot trickier. And this chart, wow, this really illustrates who benefited the most from this year's market. According to Oxford Economics, households that were more exposed to that huge AI-fueled stock boom saw way bigger wealth gains. It's a pretty stark visual of how the market's rally hasn't really been felt the same way by everyone. So, this all brings us to the final act, the Federal Reserve's big decision tomorrow. The market has absolutely placed its bet. The question is it the right one? And when I say the market's placed its bet, I mean it. Traders are pricing in an 87% chance of a quarter-point interest rate cut. 87%. That is an incredibly high level of confidence from the market. They're practically screaming what they expect to happen. So this leads to the crucial question for every investor watching right now. What happens if the market gets exactly what it's expecting? If an 87% chance is already priced in, is the good news already, well, baked in? And this is a fascinating thought from Ron Albahari at L&W. He's suggesting that maybe the Fed's communication is part of the problem, that it's confusing the market. And he thinks the real focus might shift from this one decision to what comes next, especially how the Fed communicates its plans in the future. It might not be about the cut itself, but about a whole new game plan for how the Fed talks to the market.
So the quick takeaway is this. We've got a market completely divided by fears about the consumer on one side and hopes for growth on the other, just waiting for the Fed to cast the tie-breaking vote. What do you think is going to happen? Drop your thoughts in the comments. I'll see you in the next episode.